Today we're going to talk about something that everybody wants to hear about, but really nobody wants to talk about, and that's check fraud. But before we get actually into that, we're going to talk a little bit about treasury management. Now, who here has a treasury management program within their own organization? Whether you're a public entity, like the city, county, who has a treasury management program that they run today? You have a treasury management operation?
Yes, we have the city. We have treasury management and financial aspects.
Excellent. Actually, everybody here has a treasury management operation within their business. Whether you're a sole proprietorship or whether you are a large corporation or you're a public entity, everybody maintains a treasury management operation. And what is treasury management? It's the management of an enterprise's holdings, basically your cash, with the ultimate goal of maximizing your liquidity, mitigating your operational, financial, and reputational risk. You don't want anything bad happening to the funds that you have within your organization. Treasury management includes the firm's collections, that's how you get money into your business, your disbursements, how you pay your vendors, your employees, concentration, if you have operations outside of your home office, how you concentrate those funds to your operation, investment and funding activities. Obviously, investments is anything that you have excess that you can invest. Funding is paying down your loans. Your treasury management operation could be very complex. It could look like this. You could have this many accounts, and it could be structured like this. This is an old customer of mine. More than likely, in a small business, it's going to look more like this. You have an account. All of your money goes into that account. You pay all of your bills out of there. You pay your employees out of there. You have loans, maybe, and you have investments. This is a very simple treasury management operation. But the bottom line is everybody has a treasury management operation within their organization. Back up one more. It can be very complex, it can be very simple, but it has changed since, if you think back in 1982, we didn't even have cell phones in 1982, or barely. I mean, they were the size of a car battery. But things have changed. Now you can take a picture of a check and deposit it into your account. I mean, think about that. 10 years ago, you would tell somebody they were crazy you could do that. But that's where it's come. It's come that far in that amount of time. The opposite, though, is the fraud side of it. It's all great. We all have these new technologies. We're all operating our own individual treasury management operation, how simple or complex it might be. But on the fraudulent side, what is the fraud? The fraud is the mismanagement of an enterprise's holdings with the ultimate goal of eliminating a firm's liquidity, mitigating its operational and reputational risk controls. Treasury management fraud attacks a firm's collections, disbursements, concentration, investment, and funding activities. So fraud is the antithesis of what your treasury management operation is within your own organization. It's trying to get at your money. So who's trying to get at your money? Everybody. Maybe not every day, and maybe not on every one of these types, but you've certainly heard in the news about wire fraud. You've certainly heard about internet fraud. You've certainly heard about mail fraud, phone fraud, and we're going to talk specifically about check fraud today. And everybody heard about what happened at Target, right? And you've heard about other organizations that are hit by fraud. And you look at the credit card fraud, it's a combination of internet, credit card, and maybe some mail fraud in there. It happens every day. So who's to blame? How did check fraud specifically get started? It's been around for years. You remember the movie Catch Me If You Can with Frank Abagnale, and many people have seen that. You may have even heard him speak at conferences and whatnot. But check fraud as we know it today is very pervasive. How did that get started? Do we know? Anybody recognize the gentleman in the middle of the middle picture there? Kind of hard to see. He's probably one of the most famous people in the world. I'm sorry? It's Bill Gates. theoretically, you can make an argument that Bill Gates is responsible for all the check fraud that you see today in the United States. Very easily. He invented that little computer down in the lower right-hand corner, right? He was responsible for bringing PCs into existence. That gave advent to the personal printer. I can go out today, drive out here. I don't know if there's a Staples in this or an Office Max in this. There's an Office Max. I can go buy check stock at Office Max and start printing checks. I can go home and start printing checks on any account that I have the account number and the routing and transit number for. You think back to the movie with Catch Me If You Can, he had to have an offset press. It cost $250,000. You have to move that into a warehouse. I don't need any of that today. All I need is a computer and a printer, check stock, an account number, and a routing and transit number, and I am in business. I am in business. That's how easy check fraud is. So let's look at a few statistics. 2011, there were 5,000 bank robberies in the U.S. Total amount stolen was $38 million. Sounds like a lot. 5,000 robberies, that's a lot. 38 million, that's a lot to me. I don't know about you guys, that's a lot to me. 2008, there were 760,000 cases of check fraud that were reported, with losses estimated at $1 billion. Okay, that's 790 or 760. That's just what was reported. If you think in your own business, even the city or any other business here, you may have had check fraud. You may have gotten bad checks, but do you always report those to the police? Yeah, it's $80. I write it off, whatever. For a larger company, $800. I write it off. Big multinational companies, $15,000 check. I'm writing it off. I don't tell anybody about it. The losses that you see there, $1.024 billion, are on the low side. It's probably in excess of about $5 billion a year that are lost due to check fraud. If we look at payments in general, and that includes wire payments, that includes ACH payments, that includes check payments, the average typical loss for a corporation is $19,000. Now, when you look at an average, that means you're taking all the large ones and you're taking all the small ones. There's going to have to be a lot of small ones to offset some of those larger ones. So the volume is huge. And still, you hear that we're not writing as many checks as we did in the past. Check writing is on the decline. 70% of all business-to-business payments are still made by check. So check fraud and the check payment world is still alive and well. So here's your test. Question. The imprisonment rate for check fraud is what percent? What percent of the people who are caught, these are just the people who are caught, these aren't the people who are getting away with it, what percentage of those people are going to jail? 3%. 3%? 10%? 2%. 2% of the people that are committing check fraud are going to jail. You know what that means? That means 98% of them are successful. So if you want to get into business that's 98% successful, check fraud is the way to go. Now you didn't hear, oh wait, this is being recorded. I didn't say that. I didn't say that. But it's true. Okay? Let's go to the next one. Checks are the payment instrument with the highest average value of unauthorized transactions in 2012. The average unauthorized check transaction was valued at $1,200. So the average check fraud amount per check is about $1,200. Now you compare that to ACH, which is your direct deposit, or vendor payments, electronic vendor payments, that's $700. ATM fraud, $200. Credit cards, surprisingly, is only $138. You would think that would be much, much larger. And I was kind of surprised at that. And the first quote says, while the exciting and glamorous fraud topics today involve wire fraud, account takeovers, ID theft, skimming, the results of the AFP, which is the Treasury Management governing body, if you will, their annual corporate fraud survey reminds us that the most fraud vulnerable instrument available today is the paper check. Everybody sees and hears about Target, right? That gets news press all over the place. But when you lose a check for $800 in your business, there's nobody there that's getting on Channel 5 saying, hey, we had a $800 check fraud today over here at XYZ company. You don't see that because it's just too common. And it's not a large dollar amount. It's large to you, but it's not large in general. But when you bring in a major corporation like Target, you see how much happened there. And really, Target on the front end didn't lose any money. They lost something that was more valuable than money, or just as valuable. They lost information, and they lost your information. And probably all of you here, or at least some of you here, have felt the effects of that because you've gotten a new credit card, right? Your bank has come to you and said, hey, we understand and we know from the back end that your account was compromised. We're going to have to give you a new ATM card, debit card, credit card. So it affects you even though you may not even shop at Target. Oh, and by the way, organizations in the United States lose about 7% of their revenue to financial fraud. Now, obviously, that's just an average. You take total amount of check fraud, total amount of revenue, and boom, you get 7%. 60% of all fraud instances within a business involve employees. Now, that's the more scary part. 60% of the time, it's going to happen from inside your business as opposed to somebody from the outside of your business. You know, when it happens on the inside, it's typically going on for an average of 18 months. And it can be somebody who you just hired. It can be somebody who's been there for many years. It can be, you know, I hired my sister-in-law. She's safe, right? She's my sister-in-law. He's my uncle. It could be your wife. We'll just move on. So here's our third and final test. Which check up there is the fraudulent check? You see the one in the top left and the bottom left are both official cashier's type checks. Oh, and there's a cashier's check on the right too. Which one is the top right? Any other guesses on which one's the fraudulent check? Top left? Yeah, it's kind of, this one looks a little odd because of where the Micker line is, right? And this one, actually, it's whited out there, so that's why it doesn't have a Micker line. Middle right? Center? All of them. All of those are fraudulent checks. And you think about sometimes when you order checks and it says, oh, this has got a watermark on the back and it's got all these fraud prevention tools. They really don't mean anything. Because at the end of the day, you know, this is MBA LLC. Nobody knows what their checks look like. If I have this account number down here and this routing and transit number, and I go up to Staples, start printing checks, do you know what MBA LLC's checks look like? If I handed it to you, you wouldn't have any idea. So putting all those watermark verification tools, the micro ink, all those types, really doesn't do anything. So we got to make it stop. What can we do? Dear God, please make it stop. Now, sometimes I ask people if they've had check fraud in their organization, and you know, people, they don't want to talk about it, and I understand that. I tell, and it comes up later, but I'll tell you, it's not a matter of if you will ever get hit with check fraud. It's a matter of when. It will happen to your business. If you're in business long enough, it will happen. But how do we prevent it? There's a tool that all banks offer, and it's called Positive Pay. That is the #1 tool to prevent check fraud. No system is 100% perfect. This is about as close as it gets. What Positive Pay is nothing more than a system by which you send to the bank in advance a list of all the checks that you've issued. And it has the payee name, the dollar amount, the date, the check number on it. And we hold on to that file. We hold on to that information because you're telling us those are good, legitimate checks that I issued. Then you just send your checks out. And when those checks come in to be paid, we automatically compare the information on the check that's being presented for payment against that file that you sent us. If it all matches, we pay the check and life goes on. But if any one portion of that doesn't match, then we will send you an email saying you need to go online, your online banking tool, and look at that check and see whether or not it's legitimate. All banks offer this. It's not just us. That is how you stop check fraud. Now, it can be a little bit onerous on a smaller business because you still have to be able to get that information to the bank. And you can talk to your bank about the various methods that you can use to get this payee information to your financial institution. The second way is to use dual controls, not dual signatures. A lot of companies, when I go in and I talk to them, they say, oh, you know, we require dual signatures on checks over $10,000. And I politely say, so what? Doesn't make any difference. The check that you write is not going to be reviewed by the bank. The bank doesn't care. The bank's not looking at checks anymore. They're not looking at signatures anymore. You can sign Mickey Mouse on the bottom of your checks. It's going to go through. Because the banks don't look at signatures. Dual controls is much more effective. The person who creates the check should not be the same person that's signing a check. That way you need two people to be in collusion for any fraud to occur. But if the same person is signing and issuing the checks, you got a problem. Now, if you're a sole proprietorship, you're in cahoots with yourself, that's on you. Separation of duties is the same thing as dual control. If you're large enough that you have a receivables department, a payables department, that type of thing, you want to be able to have separation of duties within each of those departments so that you don't have the same person issuing the checks as you do signing the checks. And you look at it today too, a lot of these checks have facsimile signatures on them. They're printing the signature on the check. So the person who is creating the check shouldn't be the same person that's doing the check run. Use more electronic payments. Use more ACH type payments. You can use wire transfer as well, but wire transfer tends to be a very expensive method of payment. It costs dollars for every one of those payments, whereas a check or an ACH costs pennies per payment. But the more you can use electronic payments, the less you're going to have, obviously, with check fraud. If all else fails, use number one. Go back, talk to your bank about Positive Pay. As I said earlier, it's not a matter of if, it's probably a matter of when. You're in business long enough, you're going to get bad checks or you're going to get hit with fraud. Check fraud is just the tip of the iceberg. Again, as we said earlier, you've got to watch internet fraud, you've got to watch credit card payments, you've got to watch mail fraud. All of that is intertwined, but check fraud is the easiest and most pervasive type of financial fraud that's out there. So who's liable? Who's going to pay? That becomes the next question, right? You get hit with check fraud, who are you pointing the finger at? You're pointing it at the bank, right? Hey, you let this check go through. Well, yeah, but you know what? I talked to you about Positive Pay and you didn't take advantage of that. You know, it's common knowledge that you know we don't check signatures. And oh, by the way, when I was out at your office, I noticed at the front reception desk, you left all your mail sitting up there for the mailman to come and get. And I saw some window envelopes sitting up there. And when Sally, the receptionist, went to go get you, she turned her back on me and went to get you. I could have taken one of those checks, put it in my pocket, walked out with it, gotten the account number on your account, the routing and transit number, which is online anyway, gone to Staples, start writing checks, take that original check that I stole, put it in the mail, let it go. It gets paid. And I've got your information, you don't know it. So one tip is don't let your mail sit at the front desk where the mailman's going to come and pick it up. It's very easy, it's very convenient, but that's an open door to fraud because somebody could walk in there. The guy that's cutting the grass, a UPS guy, you don't know who is coming in, can take that check, get the information, head on up to Staples, thanks to Bill Gates, and start writing checks on your account. When it comes to who's at fault, the courts are starting to lean more towards putting the liability on the customer. The customer needs to take care of their check stock. They need to take care of their payments. They are the ones that are going to bear more responsibility than the banks. Every situation is unique. I don't want to say that the bank is never at fault because there are cases where we are. But we're all in this together. We all got to protect each other here. So that's check fraud. You have any questions? Does anybody have any stories that they'd want to talk about check fraud that they've had in their organization? Yes?
I had a question about phone fraud. Give me an example of phone fraud.
Somebody could call up and try to use social engineering to get information from somebody within your organization. And it's very typical today. You see these reports on the news about, it's more common, I think, from the internet side, where you'll get an email from Citibank or, I'll use National City because they're out of business. You look at some of those emails and you read them and they're asking for information or asking you to click on a link. And that's where it starts. And what you've really got to do is work with your employees in your organization to educate them that whenever you get an email from any company that asks you to click to a link or is asking for information, just stop right there. It's okay if Citibank, National City, Dollar Bank asks or sends you information, but what you want to do is stop, get out of that email, and then go into the bank through the front door by going to their normal website or calling your bank representative and saying, hey, I got this email from you guys. You're asking me for this information, that information. What's up? It's just too easy. And it's not that anybody in an organization is trying to do this on purpose. It's just that you just don't think. You get an email. We all get emails, hundreds of emails a week. It's very easy to say, oh, yeah, I want to see what's going on because I got an account over at that bank. Let's see what's happening. Yes?
I work for a fairly large organization, and our payroll person in human resources was writing herself out a check every payday.
It happens.
It's been, and that was years ago.
Well, here's the thing, and this is a little bit outside of check fraud, but the two pieces anybody needs to create fraud on your accounts is your account number and the bank's routing and transit number. Now, the bank's routing and transit number is available on the internet to anybody. I mean, it's available anywhere. So once I know that you have an account at Dollar Bank, I can go out and get that information very easily. So I really don't need that information per se. But once I've got your account number, I can commit check fraud, but I can also commit ACH fraud. And the way I do that is I've got your account number, I've got your routing and transit number, I call up Land's End, LL Bean, Finger Hut, order a bunch of merchandise, have it shipped to a P.O. box number, and when I'm ready to complete my order, I say, I don't have a credit card, but you can debit my checking account directly. Here's my account number, here's my routing and transit number. It goes through. And if you don't have Positive Pay to stop that, and there's an electronic ACH version of Positive Pay to stop electronic payments from hitting your account. If you don't have that, as long as you've got the money in your account, it's gone. I had a case, you talk about payroll, I had a case where a gentleman was being hounded by, it was a cell phone company, I think it was Verizon, but it doesn't make any difference. He owed $300-400, this goes way back when $300 or $400 was a large cell phone bill. He was being hounded, and they told him they were going to turn off his cell phone service if he didn't make a payment. He said, oh, okay, fine. So he had his paycheck in front of him. He read the the account number and the routing and transit number off of his paycheck to the representative at Verizon, created that debit, came through, it hit the company's payroll account. So the ACH positive pay didn't exist back then, but when they were reconciling their account, they saw this debit hitting their account for Verizon, and they couldn't figure it out. Well, it took them about 5 minutes to figure out exactly who did it, because they called Verizon and said, who did this? Oh, it was Steve Smith. Oh, wait a minute, Steve Smith works here. Or he did. That financial information is something you've got to protect. You've got to protect.
How vulnerable are you to the people that you're giving this information to, like Verizon or other persons?
Well, that's the $64,000 question. You have to trust people somewhere along the line when you are making transactions. But there's no way. Every time you send a check out, you're giving information to whoever has that check. And a lot of businesses here probably use remote capture or remote deposit, where you slide the checks through the little panini machine, and then you've got those checks. Whoever in your organization is doing that has access to the checks of all those companies that are sending you checks. So use more electronic payments.
So we for the first time in all these years, got a letter from, I won't say whether it's chamber or my business, but got a letter from a company that we're familiar with, but they just now are saying we're requiring you to fill out an ACH form. Even though they pay us. I stared at it for 15 minutes thinking in my head, okay, why would I not want to, why would I not want to do this? First of all, why do I need to? And they even said they're going to still send the check anyway, so why am I giving them my bank information? Is that dangerous?
Well, you have to know your trading partner. You have to go back to whoever sent you that letter, and again, independently verify, hey, I got a letter from you, you want to make a deposit, that's fine, I want to make sure this is legitimate. Is it somebody you already do business with today? If it is, I would assume it is, only because you're saying that they send you a check normally, and they want to replace that with an ACH, that's more than likely a legitimate request, legitimate transaction. Unfortunately, you have to give that information up at some point for certain types of transactions.
Well, I don't think I understand how with the dual, with the electronic, with the paper you do the dual because you have two different people who are involved in the check. But you do it electronic, you just have that person to pay one time bill.
You may not have that, but what you can do on electronic payments within the online banking systems is create what are called pre-authorized transfers. And you limit access to who can build those types of files. So when you go in at the front end and say, okay, here are the 10 different people I want to pay electronically, you have dual control and you build those out and you lock it down so that you can't change anything other than a dollar amount. So you know exactly where those funds are going to go. But if you allow free format ACHs or free format wires, that means you can put any payee name, any bank account number in there that you want. So you want to lock that down on the front end when you open your accounts with a bank or when you are building those profiles within your organization, within your online banking.
Yeah, it seems like the banks nowadays too are checking to see which computer the transaction is coming from.
Correct.
So you can say only these 4 computers can be used, I would expect.
Right. There's a lot more of that going on where banks and their customers are trying to create tunnels that are secure. Now we, at our institution, use a software called Trusteer. It's a very common, highly ranked software. We use it on our side, and we highly encourage our customers to download Trusteer as well. So when you have that link, then you know you've got a secure tunnel between your computer and the bank's computer. And most of the banks out there, I would say virtually all the banks, are looking at your computer when you're logging on to your online banking tool. They want to make sure that it's best that they can tell that the computer that's being used is your computer or it's located in the United States. Because if all of a sudden your photography business signs on to online banking and we're detecting that that's coming from somewhere in North Korea, we're going to lock that, we're going to stop, and we're going to call you and say, we don't think this is right. So all the major banks spend a lot of money every year trying to stay one step ahead of the people that are committing fraud. And a lot of, or virtually all of this electronic fraud doesn't originate here in the United States. The Target instance and some of these other ones that you hear about, it's impossible to prosecute because these folks are in Russia, they're in Kazakhstan, they're in North Korea. They're not here in the United States. But again, going back to my previous example, it doesn't matter because 98% of the people that are doing the check fraud are right here in the United States, and that's successful. Now, it's not on the same level. You know, if I'm getting $1,200, I got to do a little work for that $1,200. But in the case of Target, all of a sudden I had how many millions of people's personal information. And I don't need 100,000 of those to work. I need 10 of them to work. I need one of them to work. And you'd be surprised. There's the Zeus malware is the kind of the most common incubator for the different types of malware that is out there. And you can go on the internet and you can find very easily companies that will sell you the Zeus malware package and will customize it for you so that you can use it to invade banks, invade other businesses, that type of thing. There are companies in Russia that exist for that sole purpose, and they have customer service units, just like any other company. You call up and say, hey, you know, I'm having trouble getting into XYZ bank. Oh, well, here's your problem. This isn't coded correctly. You need to change this to that. Different mindset.
How vulnerable are we to the banking staff? Tellers, others?
Anytime you have humans involved, you're vulnerable. You know, I think that's kind of the bottom line. I know it happens, it has happened, but then your recourse is on the bank. You know, you're protected in the respect that if somebody from the bank did something illegal, got funds out of your account, the bank is going to be on the hook for that.
You mentioned about checks coming into your business, and you might be at the front desk, laying on the front desk, things like that, or your mail coming out. I don't, from my center, I don't do that, but I do receive Medicaid, Medicare checks to my center. How vulnerable are they?
Well, it just depends on the kind of the chain of custody there. From when the mailman comes in and delivers those checks, who gets those? I mean, how many people see and touch those before they get to your receivables clerk? Now that's why, if you think back, and they still exist today, very common, are lockboxes. So instead of having the payment mailed to your business, it's mailed to a lockbox, which is really nothing more than a P.O. box at the post office that only the bank has access to. So we take the mail out of the post office, open it, deposit those checks, send all that information back to you electronically, and then it's all posted and none of your personnel touch those checks ever. And that's one of the reasons why lockboxes exist today. But, as I said earlier, you've seen the proliferation of the remote capture terminals because they're so easy to do. You plop one of these little boxes on your desk and you can run all your checks through there. It's convenient, it's less expensive, but it does open things up. You have access to checks.